Welcome back to the channel, everyone. Thank you for tuning in. Today we're going to go over the basic strategy that I use in my own personal trading each and every day. I did a video and posted it earlier, going into detail in reference to ways to stay in a profitable trade longer. You know, imbalances are an important aspect or element to our trading, but I want to cover in this video here the principal elements to the basic strategy that I use in my trading each and every day. It's around supply and demand. You know, if it's your first time watching the video, please, you must take the time to, first of all, understand what supply and demand is. Demand is aggressive buying, simply put, and supply is aggressive selling. So we're looking for those areas, but there's a step-by-step series of steps that take place in the strategy that I trade. And number one thing I always need to see is a breaker structure, okay? I talk about marking off zones on a higher base chart, you know, higher time frame chart possibly. For me, it's a 60 range. You can use a 24 range, but that's what you want to do, because when you mark it off zones off of a slightly higher time frame chart, like I like to use my 60 and my 12. Sometimes I use the 24 and the 12, just depending, you know, if the market is ranging. Then I'll move down to a slightly lower, higher time frame chart and mark zones that way. But let's go ahead and jump into this video, because again, this is just a basic scalping strategy that I use in my trading daily, and you can use it just as well if you understand how to trade it correctly. All we're doing, again, we're looking for supply and demand zones. Now, first and foremost, like I said, we've got to know what the structure of the market looks like. And as you can see, primarily the last few days we've kind of been ranging, right? Because we really haven't taken out a major high or a low down here, meaning the market moving to the upside, taking out up here at 17,056, nor down here at 16,752. Now, even when the market is ranging, you can still trade supply and demand, but be careful in how you do so. I'm going to show you a simple way that I do it, because you know, imbalances are a key ingredient to the recipe and how I trade supply and demand. So let's take a look at this. The market is making higher highs and higher lows. It folds back, right? It starts breaking structure to the downside. Then we start re-breaking structure back to the upside here and taking out what I like to call minor areas of structure to the upside. We didn't quite break this area here before we started pulling back, okay? But we were moving to the upside and breaking through minor areas of structure as we moved higher. Now, if you see here, I'm going to show you in just a couple examples what and how I trade using imbalances in my own trading strategy. Now, I'm using a higher time frame 60 range chart. I mark my zone here off the higher time frame if I see a higher time frame or higher base zone. If not, I may move down to 24 and try to find a zone on that chart. If I cannot clearly find something on the 60 range, and then I move down to my lowest time frame or lowest base chart, which is the 12 range chart. So here we have a demand zone. Okay, I mentioned we're breaking structure to the upside, taking out minor areas of structure. We fold back. There's a demand area here. It's also untested, because there's a gap of void back to the zone. All right, and we also have an imbalance area resting inside the zone. Okay, so not only do we have this gap of void coming back to the zone, but there's an area of imbalance in between or in the middle of that zone. So that makes it a high probability zone setup for me. Now, again, you have to always pay attention to price action as it's retracing or moving back to the zone there. So we got this final push to the downside, a pullback, and a move lower right here. When I see that we're tapping into a higher time frame supply area, demand area, not supply, I'm sorry. Aggressive buying, you see all these bullish candles right here. And then I've already sized up where we can possibly take the trade back to. I mean, where can I take profit, okay? And basically back up to this key area of supply, resistance right here. So this is a demand area. We tap into it. Now, I'm not taking the trade off of the higher time frame or higher base chart here, the 60 range. I then scale down to a lower time frame chart or a lower base chart. And when I speak of time frame, I'm not talking about a 60-minute or 5-minute chart. I'm speaking specifically in range charts. Yes, range charts aren't time-based charts, but I'm saying in reference of higher and lower. Okay, understand that. So what I'm going to do now that we have tapped into the demand zone, I'm moving down to my lowest time frame chart, which is a 12 range. This green box you see resting below here, that is that 60 range demand zone. We've tapped into a higher base zone chart. Zone now. So basically what I'm looking for now is basically a breaker structure to the upside. And I'm looking, if you ask where possibly I'm going to take the trade to, well, I'm looking at my higher time frame and I can see that this is resistance resting right here. So if we get rejection right here, I'm going to show you what I'll look for when it comes to the next step in the strategy when we move down to that lower time frame that I just showed you. But I'm looking to aim for at least up to this area of resistance and possibly fill in this imbalance right here back at 936 and 3/4 or 937. So now we're on the lower time frame. We've tapped into that zone off the higher time frame. So I'm looking for structural breaks to the upside and a pullback to a key area of demand on the lower time frame. So we break up here, push back, we break structure to the upside. We took out a small area structure right here, and then we broke also. So we got a structural break here and a small area of structure broken right here. There is a demand area resting right here in the zone. Now, there's also a small imbalance, or there is an imbalance resting back inside this zone here. So if we were to draw this, just going to show you right here, okay, and the market comes back to it, aggressive buying, breaking structure, took out this swing here, which is structure right here as well to the upside. When it pulls back, if we get rejection, the rejection, what I'm looking for is a close, a break and a close of a candle above the last bearish candle right here. We get the close to the upside, I'm going to go long, all right? Now, if we can get in here at 920, we are solid to take the trade back up to, here's the imbalance resting right here. Well, let's just look at it like this. There is a small area of imbalance resting right here. This candle that came to the downside, the next one that closed right here at 26 or 26 and a half. You could have got out right there. But also be mindful of this areas of resistance right above, and the market's going to go up there. There's nothing that's going to really prevent it, if you look at the higher time frame, and stopping price from going up there until it hits that area of resistance. And so you can look for and aim for right here at 35 and possibly this area of imbalance right here. So there's an imbalance from here to here, small gap avoid right there, back up to 937 as well. So maybe you're in with multiple contracts, say 4 contracts, you took out 3, back up here at 26 and a half, allow the last one to run up to at least 34, 35, maybe even 37, and pick yourself up 7 more points right there. So that's why I say that imbalances are critical, especially when it comes to supply and demand. You couple it together, and knowing where the market can go to, where the trade can go to, where you can take profit from, you can definitely capitalize on that. I'm going to show another example right quick. We're going to move over just to today's session right now. Today's January the 16th. Take a look what happened here. So the market rejects this area. We didn't break this high here. We kept moving to the downside, making lower lows and lower highs. Then it starts to move back to the upside. We're back over on the 60 range chart right here, okay? The higher time frame chart. It moves up and starts to break structure back to the upside. We start to take areas or levels out as the market is moving higher, as you can see right here. On its move back to the downside, pay attention to this. On the move back to the downside, on each one of these pullbacks, it was pretty much tapping into and filling in imbalances. But a couple areas that it didn't fill in, if you pay attention to, was like right here. All right, the one here was filled. Here's an area right here where there's aggressive selling at. We have areas of imbalances resting right here. So as the market was breaking higher, making higher highs and higher lows, of course, it's going to come back up here and test this area here because it has to fill these imbalances back to the upside. So as it's breaking structure up to the upside here, and takes out this area right here to fill in this imbalance right here, broke higher, pull back, boom, aggressive buying to the upside, demand. Pulls back to this area right here. Is this demand? Yes. Where can you take it back up to? Back up to this area here at 901. Now, this don't jump into the trade once it gets back to this zone here. Again, move down to the lower time frame, look for the setup, break a structure, pull back to a key area demand off the lower time frame, 12 range chart to take it higher and fill in the imbalances back up here. For one, resting at 901, and then maybe possibly allow it to run higher with a runner and see how far it can go, right? And you're basically trailing behind price to lock in profit is what I'm trying to say. So we move higher. We do break this area here, break this high here at 916. It pushes up. We take out this area here. We broke a high at this area here, took this level here out at 929. Now, if you pay close attention, what do you have right here? You have imbalances. There's an imbalance resting right here between this bottom end of this candle here and the top end of this candle here. Imbalance there. We also have an imbalance right here. So when the market pushed higher and took out this area, this small level right here, it pulls back. We have another area of demand that's created on this structural push to the upside right here. Demand right here. The market rejects it. Move down to the lower time frame. We're going to go ahead and do that now. So that was right around the opening of the market this morning at 9. 925. Now, when the market comes back to this area, we're down the 12 range chart here. There is a demand area on the 12 range chart right here. Okay, we could draw that if you want to. But I like to look for a break of structure. This is a confluence area with the 60 range, the 12. I didn't really look at the 24, but just having that bit of confluence enough on a higher time frame, lower time frame, you could have waited and look, for the break of a candle in opposite direction and taking it back up to this area right here. Okay, right here you can see it rejects and it comes back down. All right, so you can pick yourself up, a few points right there. But ultimately, what you want to do is look at the higher time frame to gauge where it could possibly go to. We've already took out this level right here. We see imbalances resting back up here to 915.5. So we move back down to the lower time frame chart. You could have stayed in that trade and weathered the storm if you'd pay close attention to what took place right here. So we get in right here. The market goes up, it comes back, it starts breaking back, against you before pushing up, it comes back, and maybe you got out the trade here because maybe this was your area of your thresh, as far as, it came back against you to break even, and then it starts to close below this area here at 886.5. But this is right here, this is an area of demand right here, but the bigger area of demand, take a look here, is right here on the higher time frame. Now, I'm not saying I'm waiting for we're going to allow it to come all the way back down here to 878 and then get out. No, you want to kind of get out of a trade off the lower time frame chart. Maybe use a supporting swing once the market starts moving that direction. Use a means of an area of a supporting swing as your thresh, the area where you need to get out of a trade at. So maybe you took the trade, got into a trade, took it up to this area here, and then it pulls back, it breaks here, okay? Then you get the break here, you get a break of structure to the upside right here on the lower time frame chart. It pulls back, there's a small imbalance resting right here, and then maybe you took the break of the candle to the upside here to take it higher. Now it taps into this little small area of imbalance here on the lower time frame, but there was opportunity to take probably a scalp trade here, back up to this high here, but you got to understand too in a higher time frame where we are aiming for, where we're gauging. Then it starts to pull back. So if you enter the trade here, right here, and then it pulls back, you could stay in the trade. Maybe it came back and to break even, but it didn't close below this area right here. But again, typically what I like to do is, I'm showing you this if you're using multi-chart confluence, marking a higher time frame than a lower time frame, like on a 12 range chart. What I like to do when I'm taking trades off of at a zone off the 60 range chart, the higher time frame chart, I like to see a break of structure, where the market is making higher highs and higher lows. It takes out levels to the upside here as it's moving higher, pushes up, pulls back, break structure to the upside, comes back right here. Yep, you can look to get in a trade right here to go long, but you have to be mindful that this area right here is resistance. So when it starts to pull back, typically speaking, I talk about this in multiple videos, 2 candle close below, then I want to get out the trade. Okay, that's a means or a way to protect and preserve your capital. Still, you made something here. Okay, as if you got in the break and close of the candle here, it pushes up. You get out, say right here, maybe you got out of break even. Okay, maybe you lost a tick or two, but you still are getting out the trade early enough to where it doesn't come back against you. So it does slightly come back. Okay, it comes all the way back to where on the 12 range chart where it started pushing it up originally to start breaking structure, pushing back to the upside. It comes back right to this area here. Then it pushes back up. This is where they're trying to fake traders out of the market, getting you to think that the market is going to continue running lower. But be mindful because you got to see, again, we're at a higher time frame demand zone right here. It's already broke through this area, this level right here. It's going to aim for the next area of imbalance above. So we're still in the zone. You can see on the higher time frame right here, that demand zone. And what you do is you can just wait. Market comes, it pushes a little lower. We're still in the zone, okay? And then it breaks again. It pushes up, pulls back, breaks higher, okay? And then it pulls back right here. There's a demand area, small area of demand right here. It does not hit it to the tick, but I'll talk about within 2 or 3 ticks of a small zone like this, I'm going to take the trade if we get the break and close above. So if we get the break and close above, and then it shoots up and moves higher, and it goes all the way up, as I stated here, fills in the imbalances right here, and then it aims for the next area of imbalance resting right here at 935. It's simple as that. If you practice this and back test it, what I'm talking about, trading supply and demand, looking for those areas of imbalances to fill, and just practice and practice, you'll see it'll make more sense to you the more that you do so. But All I want to say is I appreciate everyone. I'm going to close the video out here. I appreciate you tuning in and watching the videos on the daily. If you're interested in joining the Discord, find the link down in the description portion of the video. Make sure if you're not a subscriber, go ahead and click on the sub button today, right now. A little subscribe button you see. Click on it. Also, make sure to turn on all your post notifications by clicking on the bell so that you never miss one of the uploads here on the channel. Last but not least, drop a like on the video if you found value in the content. I'm pushing this content out here because I'm trying to get people to understand one of the simplest and basic strategies to use trading supply and demand. Simply put.